Hi, thanks for being with me today. I am with Ryan Davis with Integrity Mortgage. I have had the opportunity to work for years with Ryan, and the name of his company matches the actions of his company in spades. So I wanted to be able to introduce you to him today and have you hear his heartbeat and the passion that he has for what he does. So Ryan, what can you tell us about Integrity Mortgage?
Sure, yeah, thanks for letting me talk. So I've done home loans for 22 years, and I did start Integrity Mortgage because that was the number one thing that I cared about, is always taking the long-term approach, putting people before profit, and making sure that we shop the deal with them to get them the best rate. So that's why we're on the broker side. So our company is approved with roughly 50 lenders.
Wow.
We've been in business for over 4 years. I've done home loans for over 22.
Wow.
And so, yeah, having multiple lenders to send loans to gives me the ability to offer the best rate and the lowest fee with integrity.
Okay.
Like, I can truly say that you're going to get the best rate or one of the best rates or the lowest rates and fees possible with the ability to shop.
Okay.
So,
is that a typical thing for a lender to have so many relationships?
Not really. So there's captive mortgage lending. So there's three types of lending institutions. There's the FDIC banks, so Wells Fargo, Chase. They're open 9 to 5, not available nights and weekends. They typically require appraisals, and they do have what we call overlays or additional restrictions.
Okay.
They're big enough to where they can. They can pick and choose what they want. Then you have what's called a captive mortgage lender. A mortgage banking company, which I was on that side of the fence for 10 years, and they just have one funding loan. And so whatever that bank sets their profit margin at, depending upon their cost, is the rate that you're going to get. Some have better rates than others, and they typically do have decent service, but they don't have as low of rates or the product mix that we do. Because we have so many different lenders. There's 45. And in terms of loan types, I think a lot of consumers don't know that there's basically two general buckets of loans. You have government agency-backed lones.
That's your Freddie and Fannie that everybody hears in the news.
That's a conventional loan. So if you typically have good credit over a 700 and 3% or more to put down, but definitely 20%, that's the type of loan most people do. Fannie Mae and Freddie Mac are two quasi-government agencies that are separate. They do things slightly different, but the rates are very similar.
Interesting.
And then you have the FHA loan, which is designed sometimes for clients that maybe don't have the best credit. And when you're under a 700 score, a lot of times you can get a lower payment. What's the rate that someone has to come in on? So you mentioned the 20%, but you can go lower on a conventional for your down payment. What is the standard for the FHA? So for conventional loans, if you put 20% down, you avoid monthly mortgage insurance,
which is called PMI.
Private mortgage insurance. And so that's a monthly fee, and it's dependent upon your credit score and your down payment. But if you are a first-time home buyer, which means you've not owned a home in the last 3 years, or you make under a certain income, depending upon the county and the city that you're in, you can get discounted rates, discounted mortgage insurance with only 3% down. So that would be the lowest payment, the lowest rate that you could get in that bucket. But there's also down payment assistance. And down payment assistance works in conjunction with conventional loans or FHA. So FHA loans are typically for clients that don't have quite as good a credit. And so the minimum down payment for most of those programs is around $1,000 down. So they cover the down payment. You have to cover $1,000 down, the borrower does. And that payment or that down payment that they give you is in the form of a second mortgage.
Interesting.
And it's typically a 0% rate second mortgage, and you don't have a payment on it, and you don't have to pay it unless you sell the home or refinance the property.
Interesting.
So it's a great way to get your foot in the door. But with our 50 different lenders, we also have down payment assistance programs that depend, that are in different states. For different profiles that people can fit into.
That's interesting. And so that's super helpful when you have a first home buyer come through the door or a seasoned home buyer, because shopping those 45 brokers gets them the best rate possible.
That's right. So because every lender has a different appetite. for different credit risks or programs. And sometimes lenders are slow.
Mm-hmm.
So in order to keep their staff busy, they'll lower their rates.
Okay.
Sometimes lenders are going after market share because they want to be the top lender that year in terms of units and volume.
Oh,
and sometimes lenders pull back because their costs are out of control.
Mm-hmm.
Or they're not profitable and they need to be more profitable, which is totally fine.
Mm-hmm.
But we keep them honest by shopping all of those different lenders. So we have one system we log into, we plug in the borrower specifics,
Okay.
and based upon the down payment goal that they have
Okay.
and their credit score and their income, and whether it's a primary residence or an investment,
Or a second home.
or a second home or a non-traditional loan,
Mm-hmm.
then we'll price it out with all of our lenders.
Oh, wow.
And so we kind of went through the first two, the category of loans, which is agency.
Mm-hmm.
So we talked about FHA. There's also VA
Oh, yeah.
for veterans.
Mm-hmm.
And then that's no down payment, phenomenal loan. And then USDA is for people that are in rural communities, also no down payment.
Okay.
So those are the main government-backed loans. That means the government insures the lender,
Mm-hmm.
no matter what institution you go with, a
Wow.
banker, a broker, or an FDIC.
Okay.
The government is insuring the lender. So
Interesting.
that's where you're typically going to get the lowest rate,
Okay.
because if you fit into that government box and they insure the lender in case there was ever a default,
Mm-hmm.
that protects them and enables them to offer a lower rate.
Wow. Okay.
So the different type of lending then that we also have a lot of programs on is they're called different names. So it could be non-traditional lending program,
Okay.
non-QM or non-qualified mortgage, or portfolio
Okay.
mortgage.
What's the difference between the traditional and the portfolio?
So then there's no government insurance backing up the lender,
Okay.
and that's why it typically comes with a higher down payment
Mm-hmm.
and a higher interest rate.
Okay.
And so you're typically looking at least 10% down on those programs, but normally it's 15 to 20% down.
Interesting.
But if you don't fit into the government box in terms of your credit score,
Right.
in terms of your taxable income, or in terms of a myriad of other reasons, then that option is available.
Like someone who's self-employed, for instance.
Correct. So a self-employed person, maybe they write off a lot of their income that year.
Mm-hmm.
And so you need to do a 12-month bank statement program.
Okay.
That's not a type of loan that the government wants. They want traditional income.
Mm-hmm.
If you're going to take a government loan, they're going to use the income that you claim on your taxes, that you're getting taxed on.
Yeah.
So if you're self-employed, they're always going to look at your net profit. So your gross revenue
Yeah.
minus your expenses. You can add some things back in, but we do have programs like that for self-employed clients.
I love that you have the capacity to serve so many options, because what people don't realize is that one lender can not fit all the boxes to all the different real estate connections or opportunities out there. But with your relationships, you can service almost every one of those boxes.
Yeah, exactly. I mean, we try. If there's ever a product or a program that we don't have, we certainly try to get it. Now, there are times, though, to be honest, where some FDIC, credit unions, banks, they may have programs that we don't have access to
Okay.
because they're lending on their own money.
Mm-hmm.
And maybe they don't allow that program to be available to mortgage brokers like myself.
Right.
So we always encourage our clients, shop. You know, we're confident that we're going to offer you the lowest rate and lowest fees 95% of the time.
Yeah.
And in that 5% of the time, if they could get a better deal, then we encourage them to take that deal. I mean, everyone has to do what's best for their family. And I would say, typically speaking, we as a mortgage broker, with the number of lenders we do and the amount of business we do, we have roughly 50 loan officers at our company, and we're in about 20 states. We get the best rate sheets from those lenders, and we're shopping them. So I would say we're usually a half a point or more lower in rate.
Okay.
Or if we matched the rate, we would be $5,000 to $10,000 less in fees.
Wow.
That's typically.
That's a big
Right.
savings, especially as a buyer is going into a home.
Yes.
Every penny is accounted for, and every penny is being pushed toward that purchase. So that's substantial savings.
Yeah, and the reason why I made the move to become a mortgage broker was that if I worked for one bank and they decided to increase their profit margins,
Mm-hmm.
then I was stuck.
Okay.
And I couldn't say with integrity that I could get them the best deal. The other reason was I wanted to be a part of the solution,
Mm-hmm.
which was affordability.
Right.
So we have home prices that have gone up a lot,
Mm-hmm.
property taxes, inflation, homeowners insurance.
Right.
It seems in every aspect. And so we wanted to be able to have the ability to, get the lowest rate and the lowest fees, because it all adds up. And a half a point on a $300,000 loan amount, it could be $150. And if you're at a higher loan amount, typically we're saving somebody $150 to $300 a month.
Wow.
So that's substantial.
That's
and again,
very
it does
substantial.
vary, right? Every bank has different, competitiveness of their rates, and they can kind of get competitive at times and then pull back.
Right.
But we're more consistent on that because if one pulls back, we have several others that are there.
I would love to share a story about that. Ryan went to the nines for my nephew who was purchasing an attached home, a condo up in Arvada. And because of the Florida incident a few years back, buying attached homes has gotten a little bit more complicated. And I love Ryan's team and his expertise in that. But we had a lender who, up until a week prior to closing, was in the game, working hard, and then decided because there was maintenance on a totally separate building within the community that they were not going to back the loan. And Ryan's team, I swear he has superpowers. I got to check for your cape back here. He was able to get my nephew underwriting all the way through within 7 days, and we were able to close that property with a wonderful lender. So that's a personal family story that just is true to my heart because my nephew is loving his new home, and that opportunity would have just been gone. And it was the perfect location for where he works and all of those things. And we would have had to start at ground zero, and we were able to get to the finish line because of all of Ryan's work and his team and how just dedicated you are to and utilizing all those relationships you've built with the different lenders. So
yeah,
he is not lying when he says those relationships are gold, and he can serve his clients in just a exemplary way. So
yeah, and I was just going to say, in that particular situation, the initial lender sold all of their loans to third-party aggregators. So the other lender that we had serviced all of their loans, and they were comfortable with the fact that the deferred maintenance was in another building.
Yeah.
So that's just when it comes to having multiple options,
Right.
whether it's getting the lowest rate in fees, getting a deal done that maybe one lender doesn't feel comfortable with, or they take a different guideline interpretation, just gives you more flexibility.
Yeah. Well, you absolutely blessed a family member of mine, and again, it's just an example of how your name of your company is how your actions and your words match up to the name of your company, which I love. What's the heartbeat? Can you tell us about what is the heartbeat behind integrity? What makes you get up in the morning and do what you do?
Yeah, I mean, I just think, myself, I grew up and we didn't have a lot of money, and my mom wasn't financially astute. Mm-hmm. And so that's why I went into finance. Mm-hmm. And that's why I'm a broker now, is that number one, I want to make sure my clients know they're going to get a great deal. Yeah. Number two, I'm going to educate them on various loan options, so they know which one is the best loan for them and why. And, so overall, I would say financial literacy and helping clients to build generational wealth. Yeah. And so I think there's no better way to do that outside of a mortgage and real estate. It's the way that you get ahead in life relative to renting and paying somebody else's mortgage. Mm-hmm. You're building wealth with each payment. Every year, your home price is appreciating. And so just helping people get into their first home, get out of that rent cycle, and giving them a great rate, but also giving them great service. Mm-hmm. So like I said, I've done it for 22 years. My team and I are available nights and weekends. Yeah. We can close loans quickly in a week or two if needed, and just offering the balance of education, the best deal, and great customer service. Yeah,
and I think you provide that in spades. And you're living out and creating your own legacy. And I think your mom would be really proud of you.
Thank you.
Really proud of you. Well, thank you so much for being with us today. I hope you learned a lot. And I hope you enjoyed just hearing Ryan's heart for his clients, who are my clients. And it's just wonderful to offer incredible resources and opportunities for people, like you said, to build wealth and create a legacy of their own. So thanks for being with me today. And thank you, Ryan.
Thank you.
Appreciate it.
Yeah.